guys. You can see time is around 8:41. Let's look into yesterday's guys, 7th of April, Bitcoin trade analysis. Let's look into a daily time frame and see how Bitcoin has traded. I've already mentioned to you that after this sweep of this liquidity and close below this 200 moving average, and the market actually broke this structure, which I've already mentioned to you guys. You can go and see in my previous trade analysis. This is a clear breakout structure, and market retraced, swept this high. You can consider this high, this high, this high, this high, and the market even closed below this 200 moving average. Again, the market retraced, rejection of price from this 21 moving average, and the next target, which I have told you, was this sweep, guys. You can see market clearly swept this low and closed within this range, guys, clearly signifying bullishness. Now what you need to see is to look for upside only, not to look for downside. Since the market swept this low, there is high chance that the market next might sweep this high. So, and in case if the market after sweeping this high faces any sort of rejection, there is high chance the market might continue further towards the downside, or there might be a run in liquidity and the market might continue further bullish momentum. But you can see this rejection of price from these lower levels and closing below this body's range, guys, clearly signifying some sort of bullishness. So if you try to plot the low to high of this candle, you can see market is trading above the 0.38 level of this momentum, clearly signifying some sort of bullishness. So it's always better to look for bullish trades only, guys, than looking for bearish setups and targeting this swing high. I hope you understood it, what I'm saying in a daily time frame analysis. And this is Mondays. So this is Monday. So let's try to add the VWAP level over here. And the market swept this low in a daily time frame analysis. You can see the market clearly swept and rejected price and moved towards the upside and closed above between this range. So let's take this off, guys, and even this off in a daily time frame analysis. And let's look into the 5-minute time frame analysis and see how the market behaved. And if you consider the first candle, low to high of this candle, guys, it's better to mark the mid of the first candle. And this is the mid of the first candle, guys. And you can see in case if the price rejecting anywhere along these levels, and see in case if the bullish momentum is valid or what, you can see that clearly the market gap down here showed some kind of bearish momentum. But you can consider this swing momentum, guys, even broke this high and even this high as well, clearly signifying bullishness. You can see clearly the market actually broke this, clearly indicating some break of structure. And after this shift in market structure from being bearish to bullish, you can see the low to high of this candle. You can consider the market facing rejection from 0.38 level over here. You can see the market rejecting price from 0.38 level. And the market broke this with impulsive momentum and created an order block also here. You can see clear order block level here. This is a 1-minute order block, 5-minute order block, sorry. This is a 5-minute order block. And you can see the market here retraced to the 21 moving average, midway between the 9 moving average, 21 moving average. And again, the market showed some kind of bullish momentum. But here the market failed to make an higher high even after this retracement to 0.38 level, clearly signifying the change in market structure shift from being bullish to bearish, guys. Or in case you could have expected the market to take support from these levels and continue further bullish momentum. That was one probability. But what happened here is that this 0.38 level over here formed a chalk here. The support over here formed a chalk, guys. In case if the market would have been bullish, guys, the market sentiment would have been bullish, the market would have clearly broke this structure high here and even continue further bullish momentum after this retracement. But here you can see after this retracement, the market clearly was not able to make an higher high here. Clearly market changing sentiment from being bullish to bearish. And in case if you try to plot the anchor VWAP level here, the low of this candle. So if you consider to plot the anchor VWAP level, and you can see price taking support here, and this support over here failed to make an higher high. Instead, the market broke towards this downside, and the same support over here, the anchor VWAP support here, acting as a resistance over here. I hope you're getting, guys, what I'm saying. And if you consider this swing momentum here, guys, you can see the market clearly is bearish with no proper retracement, and the market clearly broke even this low as well. You can see the market even broke this low, clearly indicating market sentiment to be another shift in market structure from being bullish to bearish. And if you consider this swing momentum, guys, the 3 candle structures which actually broke this structure, and this 5-minute order block has been taken out. And if you consider this swing momentum, guys, the high of this candle to the low of this candle, you can see the market rejecting price from 550 levels over here. This is a clear 550 level, guys, where the market is rejecting price from these levels. And what you could have done is to enter short position here, keeping your stop loss just above this candle. And for better confluence, you could have added the anchor VWAP level here. and you can see rejection of price from these levels. And after this candle, you could have placed your stop loss just above that candle itself and targeting towards the downside. That's when you could have easily entered. Or in case if you might have placed the anchor way up level here, you can see rejection of price from these levels and formation of a bearish candle here, breaking even this low. And you can see rejection of price from 9 and 21 moving average here and closing below the 21 moving average. You could have easily entered short position here also, guys. The short position here, keeping your stop loss just above that candle also and targeting all the way towards the downside. But for a price action point of view, you could have waited for clear break of this low because you could have expected the market to come all the way to this demand over here, the order block level or the fair value gap here, and could expect the market to continue further bullish momentum towards the upside. This is what you could have expected because there was a clear fair value gap over here and a order block level, the 5 minute order block. So you could expect the market to come retrace to these levels and continue further bullish momentum. So this is a kind of very risky trade for you to take, but definitely according to price action, you can see clearly the market closed below this low and this impulsive momentum, which actually broke this low, the market retraced to 50 levels and continued further selling towards the downside. So in case if you try to plot the fib extinction levels, guys, the common point within this, to the common point within this, to the common point within this, you could have targeted the 100% move here, the 1.68 level, the 2.68 level. You can see you could have targeted all the way to 2.68 level as long as the market is crossing the 9 as well as the 21 moving average. So this is where you could have easily targeted as the 2.68 level or the midway between the 2.6, or after seeing this kind of bullish engulfing pattern over here is where you could have easily exited. So you could have trialed all the way to this zone and you could have trialed all the way somewhere to this zone, guys. And you can see price clearly rejecting from these anchor way up levels here also. And the market actually even broke here also. You can see clear break of structure. And if you consider this swing momentum, you can see the high of this candle to the low of this candle. You can see the market failed to cross above the 50 levels over here, clearly indicating bearish sentiments. This is the 50 level where the market failed to cross. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level over here with the of this swing momentum, the 2.68 level, and of this short swing, the 1.68 level. Both are in confluence, guys. So you could have easily exited your position here, somewhere here. So in case if you try to plot the fib extinctions here, the common point between this to the common point between this to the common point between this, you are understanding guys the 2.68 level, the 1.68 level, both are in confluence here. So you could have easily exited somewhere here, guys, and book profit here. But definitely with the minimum risk to reward, one candle risk is what is needed, guys. You can see you could have just risked a one candle. And what you can see here is that the market retraced towards the upside. This is the 2.61 target. So you could easily target it somewhere here. This is one trade where you could have easily taken and profited, guys. So let's try to take this anchor VWAP levels out. And you can see clearly the market after this try to head higher. And you can see this kind of bullish engulfing pattern. And after this kind of bullish engulfing pattern, you can see the market didn't even break this high, guys. But what you need to consider here is to consider the swing low to swing high. And see in case if the market showing some sort of support, you can see the market showing support, guys. It's better not to enter, but just to see the market sentiment only, guys. And you can see the market taking support from 50 levels over here, clearly indicating some sort of bullishness. And see in case after this support, the market is trying to, market actually broke this high or what. You can see the market actually broke this high with this impulsive momentum, clearly indicating break of structure. So the low of this candle to high of this candle is where you need to mark. And you can see the market again respected the 50 levels over here. This is the 50 levels. After this swing momentum, the market retraced to 50 levels and the market clearly broke this high. And the low to high of this swing candle, again, the market retraced to 50 levels and even broke this high also, guys. You can see the market actually broke this structure also. So what you need to consider is to mark the order block levels here. In spite the market didn't even break this high in a one single go, you could have expected this demand over here to be an order block level, the 5 minute order block, but you can see the market swept this low. But what you need to consider is to consider the 50 levels where the market actually broke this structure high. Or you could even have marked this order block also level, but you can see the market came and mitigated this order block and even swept this high. You could have made a short scalp, guys. You can see the clear target levels where you could have expected the market to come and mitigate this order block. You can see the market mitigated, and here the anchor VWAP level acted as a support, and you could have targeted here. So the long position here, keeping your stop loss just below this candle and targeting the swing high. This is a very short scalp where you could have easily taken, guys, and made a decent profit here also. Just a candle stop loss is where you could have taken. But once if this order block is mitigated, guys, it doesn't hold any value. You can see this 5 minute order block once it got mitigated. So what you need to see is the fair value gap below this order block level, guys. You can see there is an order block here, but here there is fair value gap which has not yet been mitigated. And you can see there is an imbalance here. This is a clear fair value gap, and this is a 50 levels. Or it's better to plot an anchor VWAP level here, guys. In case if you try to mark the swing low, you can see the market took support here. The market consolidated above the anchor VWAP level. Here also the market is trading above the anchor VWAP level. And you can see again after this kind of huge bearish candle, which actually broke the anchor VWAP level and closed below this level, clearly indicating bearishness. But suddenly the market showed a bullish momentum where price taking support from 50 levels of this swing momentum and continuing further bullishness. After seeing this kind of support after the market closing above the daily VWAP level, you could have easily entered long position somewhere here, guys, keeping your stop loss just below that candle. And what you could have done is to draw the fib extinction levels, the common point between this to the common point between this to the common point between this. You could have targeted the 1.68 level or the midway between the 1.6. You can see the market all the way swept this high. You could have considered the midway between this also, the 0.5 levels over here. Or what you could have considered is to see any swing here, guys. There is no proper swing over here where you could have easily traded, but definitely you could have taken a long position here, keeping your stop loss and targeting all the way to this zone, guys. Or the 1.68 level also you could have easily targeted. This is where you could have easily targeted. You can see in a single go, the market broke all the structures, the 200 moving average, the mid of the first candles, and clearly broke structure towards the upside. This is one swing trade where you could have easily taken. And after this kind of sudden impulsive momentum, guys, what you need to is to mark the low of this candle to high of this candle and see in case if the market is trading above the 550 levels. You can see here the market actually broke below the 550 levels, but what you need to see is to consider the anchor VWAP levels here, guys. You can see the market was not able to, market rejected price from the anchor VWAP level here. You can see this anchor VWAP level, but the day VWAP level, guys, the market failed to close and showed some kind of bullish sentiment where the market clearly took support from day VWAP level and broke this structure also. You can consider this to be a clear break of structure. And after this kind of break of structure, you can see this kind of pattern, this consolidation pattern, clearly signifying there is a strong support at these lower hands. And if you consider the low of this candle to the high of this candle, you can see price taking support from 550 levels over here, clearly indicating some sort of bullishness, guys. And this kind of pattern with no imbalance or fair value gaps, clearly signifying bullishness, guys. This is a 550 level. And what you could have seen, the price taking support from 200 moving average and the 550 levels here, clearly signifying some sort of demand. And in case if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 100% move. Here is the 100% move, guys. Keeping your stop loss just below this candle itself and below the 200 moving average, a one candle of stop loss, and you could have targeted all the way to 100% move. This is the target, guys. I hope you're understanding what I'm saying. You could have made multiple scalps, guys, in this position. You can see after this rejection of price from even after this kind of huge bearish momentum, guys, the market here rejected price from the day VWAP level. So you could have easily entered long position, keeping your stop loss just below the day VWAP level also. But here it showed some kind of manipulation, but definitely the price here was not able to cross the 550 levels. And since this order block level has been mitigated, there was a fair value gap below this order block level, and so the market has to come and mitigate this fair value gap, or we can consider some kind of imbalance. So the market came and mitigated this, guys. Only because of that, this order block level has been failed. But you could have taken long position here and targeted this swing high. You can see you could have made a short scalp also here, and you could have even taken this position, guys, seeing this kind of 550 support here and keeping your stop loss just below that levels. Even though the market here didn't show any chalk formation, definitely it's a kind of risky trade, but definitely, but you can see the market is overextended towards the downside, and definitely you could have taken long position here. You can see you could have targeted the 1.68 level. You could have taken long position because in a daily time frame, which I have already mentioned to you guys, in a daily time frame, the market will sweep that liquidity and continue further bullish. So you can see you could have marked this low here, this swing low, and look into a 5 minute time frame and see once if that swing low has been swept. You can see the market here swept this low, and what you could have considered is to market to continue further bullish momentum after sweeping this low, and definitely you could have looked for long side. But let's not consider this, guys, and see how the market behaved. And this is about my Bitcoin trade analysis, guys. So in case if you find my videos helpful, guys, please like, share, and comment. Share with your friends and family. And please leave a comment below if you really find my videos helpful. And if you want to keep in touch with me, Instagram is a way to go. and you can definitely message me there, guys. So thank you, guys.